Today, sir, what we will learn is I will open a blank Excel, and from blank Excel, I will tell you how to copy paste numbers. Yeah, already shown in the this is already shown in the previous videos which I have sent, but again I will do it. And after that, we will follow the methods that we have done it in the uh, in our the previous file, the working file. Okay. Now, I hope you guys have the working file I have sent, right? That file is there, right, with you guys? No. Last class file I have sent, right? And then let me check. Guys, do you have the file? Last class file? I don't remember it sending it in the group. Is it the stock list file? Let me check. Guys, if anyone has, please send it in the group. If any one of you have. Guys, please send in the group now. I'm waiting. The last class file. I'm not able to download it from my WhatsApp. Okay, fine, it's done. No issues. Okay. Okay, got it. Okay. Now I will open a blank Excel in front of you. Let me share my screen. Now we will do it. See how much time does it take to make a model? It should not take more than 2 hours. Now I'm going a little fast because we have already done it. Just listen. Obviously we'll share the video later on, but now I will tell you how to make a model in a very fast way. We were talking about okay. Let's take Maruti or maybe TVS. You guys have done TVS, right? Let's take TVS. What I do first thing is you go Google. I can go on Srina.in, or else you can Google about annual reports for TVS Motor Corp. TVS Motor Company. Okay, annual report. This you can directly do it. Annual report 2023. You can get it over here. This is the first way of doing it. Googling. Okay. Second way, you go to Screener. You type over here TVS company and documents, and over here you will find the annual reports of. So I usually prefer this. You will prefer this because it is the easiest way to get all the annual reports in one way. Then third one is going on the BSC India website. BSC India, because this is the official site. These are all third-party sites. Screener and all are third-party sites. Here the results are posted by the company. Everything will find in this website. Again here, TVS Motor Company. Here you will find financials. In financials, you will find annual report, not results. It is annual reports. And here you will find all the annual reports the company has published till now. See here you have from 2002. This is the way we do it. This is the official way. This is third party now. Usually this website have updated recently, and then the company website. This is the best way of doing it. I download. Now downloading. Okay. make sure you download it and download, make a folder. So I have a folder name. Um, Companies, I will TVS, okay, TVS Motors, I have. So I already have downloaded it, 23. Okay, this I already have it. Here I download, make a folder, now download it. So done, and make sure whenever you open the file, so we go again where I have kept it, my companies, so here, TVS Motors, and then now make sure you open it in Adobe Acrobat document. Show you if it's not there in your computer, go and download it from Google. It is free of cost. There is a reason, because there are some functions which are not used. Which are used in this Acrobat. Or else you can do like, if it's there in your PC, you don't know how to open it. It's like open with. It's like Adobe Acrobat. Or else you can just go and Google it. You can download the file. Okay, here, download the software. Download. It is free. It is free of cost. Download Adobe Acrobat. Here you open. And then you will download it for your PC. Okay, you can download it. It is free of cost. Okay. Now, since I have to open it, I open it with Adobe Acrobat. Now here always we have to take consolidated financial results, not the standalone. It is always console. Console means this your results of all the subsidiary companies. Means what? TVS Motor Corp, usually the TVS Motor Company, it might be the main business of TVS is selling bikes, that we know, but there are many acquisitions that they have done in the past. Those are not full stake, only maybe 40% stake, 50% stake, more than 40% stake. So more than 40% stake, usually it is said to be a subsidiary, means a company which TVS owns. So here you will see all the name of the TVS subsidiaries. So all these items, so this is also part of the company. So in the consolidated statement, you get the numbers of this company as well. You will not get it differently, but it is all combined and given. Standalone, it might be only about when you say standalone financial statement, it might be only about the TVS company selling bikes. But now they see they also have TVS housing, services, credit service, electric mobility, something listed in Singapore. This all you get the numbers in the consolidated sheet. So always take up consolidated numbers. It says 178. When you value the company, you value based on the entire company's operations. This is also part of TVS only. Okay, now I will go to console. It says 178. So 178, but the pages are over 139, so it might be the half. Maybe 100. Check. So 170, they said this one. Okay. Yes. See, now you have to punch as in copy paste it. That is one reason that one you can do. Sometimes it happens that you cannot copy paste this. Now copy paste as in how? You cannot copy like this. You cannot copy and paste. If you do it, copy and you paste over here, it comes like this. Okay, so you cannot do that. So what you can do is you have to press Alt. You have to press Alt. When you press Alt, you see the cursor changes. You see, I cannot zoom it. Let's see. Okay, you see the cursor is changing when I press Alt. The cursor changes. So here, I can do is now when you see, now you have to same drag it. Click your mouse and drag it, and if you are using a laptop, make sure you take a mouse, that is very useful while using Excel. So mouse is important. Don't use your laptop mouse. That takes a lot of time. When you have to make models, make sure you have a mouse with you. Make sure you have, because in laptop that mouse is not that is only for emergency purpose. When you have to actually work with a mouse, you should have an additional mouse with you for when you do modeling. Now this see, and I cannot drag it. You have to do column by column. So make it column by column. So I copy over here. Copy. Copy. Go over here and I paste it. See, when I paste it, it all comes in one line. All comes in one line. Okay, now the problem over here is the Excel don't recognize this space. They don't recognize this space. This space also they don't recognize. They don't recognize this space. So while doing numbers, while copying numbers, you cannot copy like this, because they will not recognize this space. Because see, when I do it, let's say total assets now. Okay. Copy and I paste it from over here. See what happens? They don't recognize the space. So there was a space over here. So financial assets is now investment is 364. Okay. So they don't recognize the space. So what I suggest to students is, whenever there is a space, just stop. Now again, same Alt, you have to press Alt and copy. Press Alt and copy. Now here you have to stop. Since there's a space, make sure you stop. Copy, and it is starting from where? Plant and equipment. So plant and equipment, okay, and paste. Control C, copy, and then Control V. Then investment. It starts with investment. So again, press Alt. Don't copy the calculate number. See, this is a calculation. You see, when there are two lines, or maybe if it is bold, it means it's a calculation. So don't copy that. You have to calculate on Excel. So you have to only take above the number, above the calculation. So again, Control C and investments and paste. Okay, now again, there is a space. So we will leave this space, and it says 1825F. So obviously it might be a addition of all this. So what you can do is, you can also improvise it, saying total non-current assets. Non-current assets. And whenever you put an heading or whenever you calculate, I had said, whenever you calculate, make sure you bold this. This is also bold. This is a bold. Now, you know it is sum. So sum, you can do all the, and you should see whether the numbers is right. 18,225.68. Yeah, it is right. 18. As of now, keep the decimals. When the balance sheet is fully done, we will remove the decimals, because we also want the decimals to correct it. Now again, current assets, there is no space over here. So make sure when the assets open, there is a space. This is total assets will be bold. They have also calculated total non-current assets. Total non-current assets. This might be different for different companies. Total current assets. This might be different for different companies. That is why the more models you solve, even copy pasting is an art. Here now again there is a space. Copy pasting also becomes difficult at times. Now these are the things. Now if you don't even know how to copy paste things, what are you value adding to the team? The analyst or the manager will not help you, will not tell you that, will not teach you how to calculate. I have seen students saying that, sir, I don't have experience, but given a chance, I can be a good maybe employee or candidate. So, well, given a chance, why would I give you a chance? If you don't know how to copy paste things, I'm not going to teach you. Means as in the analyst say, I will not going to teach you. This basic Excel skills, so you should know. That is why models are important. Because if you cannot value add, you just cannot copy, because this thing associates does this. When he gets on roll, as you guys, when you will go for research role, this is the first thing you will be asked. You punch, whatever you do, I want these numbers in Excel. Whether you punch it by hand or copy paste or maybe use any softwares, and you don't have, believe me, I was working with Crisil, there was no software, no third party software. You say, sir, we can do this, we can convert this PDF into Excel, we can convert these numbers. In Crisil also, I didn't get. So I don't know if you go for any other companies, do they have any softwares to convert it? I don't, I don't know. If Crisil wasn't giving, so it is a part of S&P 500. So if those companies are not giving any softwares, I don't think that other companies are giving. Even my past companies, there were no softwares that to convert it. Basic Excel also not 23, but like Excel 2010. Yeah, so 17, yeah, it is tallying. And then your total current assets. So it should be total current assets plus total current, the non-current assets. That is 35,232, 23.91. That is right. And this was our FY 23. There is no software. Usually there is no, yeah, Satyam, there is no software to convert. But I have heard students saying that they have some software. I don't know what they say. There is FY 23. Even Satyam is saying Satyam also works in a big MNC. Even they don't have. So these things, sir say, students say that, sir, we will download it from saying we will download it from Money Control or third party apps. It is not. We cannot do it. Okay. Hey, just a minute. I'll be back in a minute. Yeah, sorry. Okay. Now, now I'm doing it quickly. I've told you this. Now I'm doing it quickly. See how I do it quickly. Acha, how I shift between this I'm doing quickly. It is like Alt and Tab. You can press Alt and Tab. It opens and you can shift it by pressing Tab. If you don't know, Alt Tab, we can move around. See. It is now where it is starting borrowings, financial liabilities starting from borrowings. Make sure, this, when there is a dash, make sure it is 0 because the Excel will not take dash. Now I know this is my total non-current liabilities. Missed out. Controlling interest, then it is total. See, they don't give it. You have to write it. Every time they don't give it. Some companies might give, some others don't give it. Make sure 59. It is telling this bold. This is bold. Okay. This is total non-current liabilities. Yes. Yes, Satyam, you can do it. There are third parties. What is that? No, data is obtained as fine, Rupashri, but as Satyam said, right, there is a problem in formatting. Bloomberg generalize it, they make their own reporting format. See, these all third-party softwares are for companies which you are not tracking. Means the companies like, if you want to have a quick look at the company, all third-party softwares are for those things. To have quick look. When you have to do actual analysis, annual report is the only source. If you read Warren Buffett's quotes or maybe his interviews, he says annual report is the only source of information. He don't never use the computer. He never used the computer. If you think you are great than him, to take data from some other softwares, then where we will stand. So third-party softwares are never used in analysis. If you're doing it for your own company. For quick analysis is fine. See how I do now. For TVS, I have to look for Bajaj. So quickly I can go and look at Bajaj. Following these libraries. So those softwares are only for your quick analysis, not for your actual analysis. This is current tax liabilities. Okay. Total. And when the company results are out, sorry, Kalyan, what are you saying? You can use one of your Excels, which you already punched. No, I'm just telling those who have not done. I'm just doing it for 1 year. Can do it. Current liabilities, and then equal to sum. Okay. So one I will do, and then copy. So total liabilities are our total liabilities, and now total equities plus liabilities, total liabilities plus the total equity. Okay. This we have already. And now, okay, this is not required. Done. Make sure view freeze these pens because do this. Okay. This is 23. So now make sure you now we should have a always have a check whether it is tallying or not. Is equal to equity, total equity minus total assets. It should tally. I always keep a check. Oh, yeah, say it's a check. Just keep a check. Then always use a comma sign. It should be dash. It should be, even if it's zero, then sometime what happened, there is a minor difference, 0.0001. So that also shouldn't be there. So when it is dash, it means it is actually zero. So dash how you get by using this accounting function. Oh yeah. Means my balance sheet is right. Okay, now I can format this. Okay. Done. 23. Then now 23. Now I have to do for 22. Okay, we go like this. We don't go from 23. I have seen students 23, 22, 21, 20. We do like this. It is not. We go from left to right. Not 22 numbers are over here. Okay. Copy. Just one minute. Hello. Okay, I'm just copy pasting. Achha, I have your Kalyan, you have done, right? Okay, 1 second. I will take your file. Can you send it again in the group? So now once you have done this, so what happened? I can now easily copy paste things. Copy, paste. Okay. By 3, copy, paste. Okay. Because I have already punched that numbers over there. Now this becomes easy. See how fast I'm doing it, because I have done this a lot of time. When you do it, this should not take more than 1 minute. This shouldn't take more than 1 minute, because this, when the results are out, as you know, every quarter there is a result. When results are out, you need to be quick of punching numbers. Should not take more than a minute to punch this. If you can copy paste directly from the PDF, because this I have already done it. When the numbers are out for 24, I can just have to punch this and it becomes very easy to do. I have to just drag it over here. Right? Becomes easy. Okay. This is the first step of punching numbers. Now you guys have done it, so I will take it from your file of the numbers. So same way you have to do it for P&L, cash flows, and balance sheet. Balance sheet I have done, the P&L and cash flows. Let me check. I have not checked your files. Kalan, can you send it again in the group? To find it somewhere. Kalan, can you send it? I think Shweta has sent. I have to check Shweta's file. Pranav I also done. Okay. I will check. Okay. So TVS Financial. Okay, so Pranav have done it. Yeah, sorry, I've got it. Pranav. Okay. So we'll use his file only. Okay. I hope the numbers are right. So it is a 0.01. Okay, this file only. I will use Pranav's file to do it. TVS Financial. Okay. Now, okay, now the formatting part, there shouldn't be any decimals. Okay, no decimals. So select all. Shouldn't be any decimals. Assuming you have punched this number, Pranav has done a good job of punching this numbers for the last almost 9 years. So now make sure, okay, 14. So if you have done win 14, so every sheet, the B column should start with 14. Again, 14. Okay. So, I don't know whether he has the bold numbers now. Okay, he has copy pasted it. That's fine. It is all okay. So all bold numbers are okay. So, P&L also. See, now it looks good that you have always zero. There shouldn't be any commas. Sorry, any decimals. Okay, no decimals. Okay. Now this, this is how the result comes. This is how even the quarterly results come in this same format. Now, obviously, the format keeps on changing. The number items gets on added, subtracted. So at that time, you also have to add items. Or if there is no item, just keep it 0 for the future years. Items can get added, can also get deleted. But when you delete it, obviously we want the previous numbers as well. So don't delete any rows. You should, if it's there, just keep on adding. If there's any other item, which is usually there is no item, but sometimes different companies might have different items. So now this is in a very unformatted way. Now we have to format it in a better way, because here we cannot find what is the gross margins, what is the gross profit, what are the revenue growth, what is the EBITDA margin. You don't see over here. So what we will do is we will create a format. our own format. Now, why do you create this formatted P&L? Because here we need to have all the data. Once the numbers are out, we need to have the EBITDA margins, EBIT margins, PAT margins, the growth, whatever things necessary in the P&L. So here I will club this numbers, or maybe make a format where I will be able to understand, analyze a result. Looking at this, you cannot analyze the results. What has happened from year to year? What are the margins? Numbers are fine, but you don't know. And what was the increase? What was the decrease? Which year it was a greater increase? You don't know all those things. That is why we make a format. So I start with revenue or sales, whatever you say. Okay. So now particulars. This number, first of all, this numbers are in what? Millions, billions. What are these numbers? Now Pranav has not written. So a big mistake is in crores. We need to have the numbers in crores. Now what happens? Ideally, in India or globally, millions are used. If the numbers are big, we don't say crores. Crores we say only in India. Millions are used, or billions are used, or thousands are used. It is always thousands. So these are the formats which are followed. Thousands, millions, and billions. So these are the only things which are used. Now you tell me. Which, now this, okay, this the punching, this copy pasting, so we cannot do anything. Copy pasting should be done in your millions. Sorry, whatever the number is, crores, lakhs, because we have to just copy paste things. So we have to do it very quickly. But what happens when we format it? When we have to format it, we should write particulars in million. Okay, we have to take it in millions. So that time, what we can do? Now you guys tell me, from crores to millions. What should I do? I want to write this amount in millions. 31,000 crores, I should write it in millions. What to do? How to convert this? You know what happens when you do for any IT company? You do for any IT companies have IT companies usually have data in 3 different format, because there is US report differently. Whether sometimes if the numbers are small, they report in thousands. Let's say sometimes they report in thousands. In annual report, you will find in millions. In presentation, you will find in billions. In some other sheet, you will find in thousands. So they keep on changing depending on which area are they which areas they are reporting, or what are things they are reporting. So majorly when you find this, I have this problem in IT companies. 3 different sheets, uh, 3 different same sales only, they report in 3 different ways. Now how to make it function? Now let's say I tell you something like, okay, my sales were 100 crores. Okay, my sales were 100. So let's take a random number. My sales were 4,000 crores. Okay. Now what happens? The breakup of sales. Let's say 10% is coming from US, 50% is coming from India. Example, all such things. Now those are reported in maybe in lakhs. Might happen. Those are reported in lakhs. Now tell me, if the same thing, now assume this is in lakhs. Our format is millions. Our format is millions. I'm saying this might be in crores, this might be in lakhs. Just giving an example, this lakhs, and then it lakhs, then maybe billion. lakhs, billions, and maybe crores, lakhs, billions, what is it, thousands. Okay. File. The issue with the file. Hmm. Now tell me how to write this number in millions. This is in lakhs, crores, billions. Now how to write in millions? Now every time you cannot Google it. Every time you cannot Google it, saying that, or maybe each and every numbers you cannot Google. It will take a lot of time. I have seen students saying, "Sir, Google it now. Why to use our brains? Google it. Use technology. Technology for okay for one two things is okay, but if there are so many items, every time you cannot Google it. You have to use a little bit of your brains. Now, this also typing error. Typing error. If you put these numbers differently, all your analysis, all your assumption changes. And in so many items, if you miss 2 3 items, it you cannot even recognize that you have missed something, and there is a big issue when punching numbers. That is why this managers, why they want people who are CAs, CFAs, MBAs, because MBAs from good colleges. Why? Because they know that these guys have done this in their past. Other students do not do it because they have never come across this kind of stuff. CA, why they take? Because it is like he is more what do you say? They prefer CAs because they are more intelligent. They prefer MBAs from a good college because they are more intelligent. You tell them something, they will easily grasp. Assuming they assume it, but it is not like that. It is not always like you can also be. They have done okay. They have done hard work, so they have been a CA or a CFA. But it is not that everyone cannot be a CA. Everyone cannot do a pass out from IIMs. How can you at least be good with this normal stuff? Is like using our brains. Okay. Now here, oops. Now I'll give you a technique how I figure it out. Millions have okay. Let me do it over here. Millions have how many zeros? Millions have how many zeros? Millions have 6 zeros. Crores have 7 zeros. Billions after crore that is billion, right? Billions have 9 trillions. Billions have 12. Now this Western people have made it easy. They like write it this way: thousands. Okay. They usually write in thousands. They only write. They talk about thousands, millions. Talk about thousands, millions, and billions. So thousands, like it is like 3 zeros in thousands, 6 zeros in million, 9 zeros in billion, 12 zeros in trillion. So they write it this way. They make it simple. Indians, we have complicated things because you will never see they talk about 1 lakh, 2 lakh. They always talk about 100,000, 150,000. They don't, and millions. They don't talk about 1 lakh. They say I have a 1 million with me. The thousands have 3. Here, can I say lakhs? In India, there's one more thing called lakhs. Lakhs have 5 zeros. Okay. Thousands we have, lakhs, millions, billions, crores. Okay. Now this amount, assuming this amount is in thousands. Okay. Now I said millions is what we want. Okay. All this amount we have to write it in millions. This is our major. Now what if this all numbers are in crores? Okay. Is there some issue with my Excel? Now, how to write this thousands and millions? Now, what I assume, how do I write this? I will not Google it every time. See, thousands have 3 zeros, millions have 6 zeros. Difference is 3. Difference is 3. Thousands is a small number, millions is bigger, right? It's a small, this is small, this is big. Let us say if I say this 100,000, I will say it is 1 million. No, 100,000, 10. So it is like difference of 3 zeros. Always a difference of 3. So what should I write? Will millions be more than this number or less than this number? This is in thousands. You know, this is already a smaller number. We want to write it in a bigger way. So when we have to go from thousands to a big number, you have to always divide because we are moving towards a big number. As we are always moving towards a big number. So whenever you do thousands into millions, the difference is 3. The difference is 3. So you know that 4,000 is a smaller number. So when it becomes big, obviously it will be a smaller one. So when you go up the value, you have to divide it. Divide by how much? By 3. So 4,000 divided by 3 zeros. That is 3 zeros. So it is like 4.1 million. Now you can Google it. How much is 4,000,000? It is 4.1 million. What I have done, divide by 3 zeros. Now lakhs and millions, what is the difference? Lakhs and millions, the difference is 1, 1, 0. So obviously, lakh is a smaller number, millions is a bigger number. So you are going up the value. So you have to divide. So like this will be divided by now 1, 0. Divided by 10. Is right now? If I do 10 lakhs is 1 million, right? 10 lakhs is 1 million. So this answer is right. So we divide by 1. Achha, now from millions to crores. Oh, sorry, crores to millions. Now we know that crore is big, millions is small. Now we are going down. We are going down the value. And what is the difference? Again, the difference is 1. So we have to multiply by only 1, 0. Right? We have to multiply by 1, 0. 1,000 crores, or maybe 1 crore is how many millions? Whatever, 1 crore. 10 million, 1 million is 10 lakh. Obviously, 10 million will be 1 crore. Answers? Right? Now again, billions. Billion. Now you want to write this number in millions. To write this number in millions. So what you will do is 4,000. Now again, what is the difference? 3 is the now difference is 3. Now multiply by 3 zeros. 3 zeros. This is 41,844 millions. You can write it. 1 billion is 1,000 millions, right? So now usually you will not write from bigger to smaller number. If the numbers are given in billions, you will again convert it into millions only. Okay. If the numbers are in billions, convert it in millions. Sorry. If the number are in billions, so obviously everything should be in billions only. You don't go in a smaller value chain. You always go to a bigger value chain. Why we do that? Because we always want a smaller number. We don't want a bigger number. Usually, we don't want a bigger number. So either you take millions or billions. So here, if you take billions, what will happen? That the numbers will be too small. You take billions, numbers will be too small. Rather than crores. I'll do crores into billions now. This is in crores. How to convert into billions? We are going up the value. So we have to divide. Crores have 7 zeros. Billions have 9 zeros. So what should I do? How should I write 1,300 crores into billions? Guys, what should I write? What should I write? 1,300 crores. This. Divided by 100. 2 zeros. We'll get 13 billion. The numbers will be 13 billion. Okay. Come over here. Now the trillions. Trillions will be, now there is a difference of 6. Trillions will be 1, 2, 3, 4, 5, 6. This is okay. Can put numbers. 1,000. Try doing it. 1,000. This is how it works. Okay. Now here we have to do it in millions. We have to do this in millions. So what we will do is, what we'll do now over here, these are in crores. These are in crores, numbers are in crores. We have to do it in millions. So divide by 10. Divide or multiply? Crores. We are going to millions. Multiply by 10. And we are going down. Now, since these numbers are big, it will increase 31,000 crores. So it will be 3,97,000 crores. 19,000, sorry. So first I'll make a format, revenue, sales. No, then we usually talk about COGS. We'll talk about year-on-year growth. COGS, then we had expenses. Now there are all indirect expenses. Can I say this was direct expenses? Direct expenses. Only COGS. So indirect expenses. Indirect, we have taken employee expense. This were basic employee expense, and then there was other expense. Let us say if the company has anything different, employee benefit, yeah, other expenses, right? Then it was your EBITDA. Right? Just recollect things. Now till EBITDA we will do it. We will take 2014. There was 2014 revenue. Now what I do is equal to, I link the revenue. Okay. Revenue. So revenue. This was the revenue. Direct expense. Now COGS. Now what is COGS? COGS is a combination of all these three expenses: cost of material, purchase of stock in trade, and changes in inventory. Yeah, total revenue from operations. No, revenue from operations. This is other income. No? This is a part of non-operating activity. This will come later on. You have to just want operating activities. Okay. Cost of material. So if there is other operating activities, you can link it. You can club it and do it. See here how I do it. Here how I do. This three forms a part of your other COGS. So I will is equal to link plus this plus this. And then press enter. So it comes COGS. Okay. Now COGS divided by sales. Now what is this? 64, I say. Cost of sales, or maybe as a percentage of sales, you can write it. If 64% is my cost, so what will be my gross profit? Gross margins rather. So find gross profit first. I will find gross profit. revenue minus expenses, you will get your gross profit and then your gross margins. If 64% is the margins, cost, so my margin will be 35%. Yeah. Now, your indirect expenses, we had employee expenses. Employee, this three taken. Achha, now, whenever I take items, not forget, I usually mark it with this I have taken, this things I have taken. Okay, this I have added it. So I know that these things I have taken. Now I'm taking employee benefits. I will mark this. I have taken this employee benefit is equal to, go and link this employee benefit. Okay, other expenses is equal to P&L and take your other expenses. Make sure you mark it. Okay. Now this excise duty. You see this excise duty is over here. From here it has. You don't see from 2019. Because you don't see it because GST came in from 2018. That is why in revenue figures only GST is now been added or subtracted. Means when you say you have done this revenue and this was excise duty was a different cost. Nowadays this revenue is a part of X of the cost. Means X of GST. So what we will do for previous year, we will do revenue minus the excise duty. That is the cost. It was before 2019, it was like this. Now it has been clubbed because we don't separately give excise duty. So over here, revenue minus this, will do minus the excise duty. Okay, this is your revenue. Now, so now make sure everything there shouldn't be any decimals. For margins, 1 decimal is, you have to give 1 decimal for margin because if you do this, it becomes 30. So we need to have that 1 decimal with us. Margins to be, all the percentage sign that to be italic. Direct expense, gross profit, indirect expenses. Now you will have your EBITDA. EBITDA will be your gross profit minus employee minus other expenses. It will be your EBITDA and then it will be EBITDA margins. Divided by revenue percentage and 1 column. You got your EBITDA. After that, what we take is depreciation and amortization. Amortization. Equal to. So let me link everything first. This I have taken. Depreciation, I'm taking it now. Again. Now you'll have your EBIT. Yes, minus depreciation will get your EBIT and then EBIT margin. So when we talk about the companies till EBIT, we should have the numbers correct. Correct as in this till here we can format it. After that, there might be hundreds of items after this. Discontinuing operations and that is, see here we know we have got all the operating items. All the operating items we have got. Now after that, there is all non-operating items where we are not much interested apart from the interest part. Apart from the interest. Then cost of goods I have included this all things, these 3 things. Cost of material, purchase of stock and changes in inventory. These are the part of COGS. Yeah, Pranav, we will be converting into millions at the end. First, let me link it, then I will tell you how to convert it. Interest and all interest, and what was okay, interest wasn't taken, then what was there in this other income was there that you have not taken. Interest we are taking it, other income is what is remaining. Then now when you go down, share of net profit or loss, this also thing, you can just copy paste. So now your share of net again, net profit or loss with associated using equity method from associated, right? From associates, okay. Then exceptional items and anything else, loss. This will do it. This is not required. Till here it is fine. Yeah. Now let's do it. All just link it. Interest is all non-operating items. P&L, let's do the interest cost. Then let's take the other income. Of the other incomes, then net profit or loss. Associates. Okay, now sometimes this exceptional cost. Now here you have to see what is it. It is add or subtract. See here they have added. Here they have added. In some companies they subtracted. In some companies they subtracted. So make sure whatever you are, when you write exceptional items, what is it? Is it an addition or a subtraction? Everything here they have added. So we should also add it. No, it was 290, so plus 18 makes 308. So it is added. And then comes our profit before tax. Now carefully, EBIT, now interest is an expense. This is an income. This is also an income. This is also they have added. This coming PBT 308 means our format is right. We have not missed anything. If a PBT is right, means everything we have done it in a proper way. Okay. Now the tax part. Tax expense. Tax expense. Tax expense, again, we will club it. Everything we will club the expense. We don't have to write it separately. So now they have already given it total tax expenses. So fine. If they have not given, just add both. Well, we will add this. Now we have to write effective tax rate. Effective tax rate. Now to calculate the tax rate. How to calculate the tax rate is your tax expenses divided by PBT. That is our tax expense. And make sure you write it separately. Everything. See, I've left space for every item because I want to show this, because whenever we present a model, it should be presentable. Whenever we show a model to someone, it should be presentable. Should not be, sir, just take it. I have made a model. Just look at it. You figure it out what I have done. I have seen students sending with a model, sir, you figure it out. So my balance sheet is not telling, you figure it out. Why it is not telling? Format. Okay, so every profit has a format, effective tax rate, and then we will have our profit after tax. That is PAT. PAT and PAT margins. PAT will be PBT minus effective tax rate. PAT margins, PAT divided by revenue. That is 2%. Then PAT. Now I have got all my profits. Here always I will put a, now see how I format this. I will format this like this. Sorry. So also okay, separately. I will put this double line, always use not top and bottom. Some issue with my picture. I don't know what is happening. Yeah. Revenue. All items should be presented neatly. Here, EBIT margins. It looks clean. Now, once it is done, you have done it for 1 year. And just copy this full entire. So now make sure this is right. 187 and here it is 187. 187. So it is right. Now copy, just go this side and paste it. Automatically it will come. Automatically you will get the second year. This year you will know that what is happening in the next year. Like this, and we can also take the growth, EBITDA growth. Let us see. So EBITDA means revenue growth. 8,000 became 10,000. So what? How do you get the increase? Is ending year divided by beginning year minus 1. Ending year, ending value divided by beginning value minus 1 will get you the percentage increase. Then again, it should be an italic part. You can just copy this. Copy. We have how much still 23. Now, yes, taken 20. Let's select over here. Select the entire row. You can also press Ctrl R. You get the numbers directly. Till 20. We have done till 23. See, now we got to know what is the growth that TVS have done with just one click. First time it is important. Now, whenever 24 numbers are out, you just punch it and do copy paste, it will come. Okay, but I have told you we have to do it in millions. These are in crores. So first convert it into, let's convert it into millions. So millions we have to multiply by 10. Let's see how I do it. First I've done it in crores. I have to do it in millions. So what I do, see I put it 10 over here. Put 10, okay, not here. Put it 10 and then see, I know I have to multiply, right? I have to multiply this. See what I do. Copy. Paste special. Paste special. And I put over here multiply. I do multiply. I press OK. See it changed. And this I can do it for all this. So how I do it? Show you again. This I have done. Multiply by 10. Now let me do it again. Copy. Now I'll select what all things I have to multiply. One, this second, third, fourth. I'm pressing Ctrl and then clicking it. Depreciation, interest. This. Okay, these are the things I have to convert it. Rest all is coming from calculation. Now pay special, multiply. If it is divide, it would have been divide. Okay, if you are dividing it from a bigger to smaller number. Now you have to multiply. Just press multiply and press OK. It changes. Make sure you make the format correct. All right, we got the answers right. Now just copy. Okay. Putting the formula and keeping. Okay, now copy. Now you can do it. I automatically take the numbers. At 23. 3 lakh. You got the numbers. Now everything you got, the tax rate, effective tax rate, what is the change, how are the margins impacted? Majorly is this, our EBIT margins are important. EBITDA and gross margins we have discussed. These are important. What is happening is gross margins were declining over here and then it started increasing. You see, 38. Achha, what must have happened in TVS? It was 29%, and now they are doing 34%. Reasons? 34, 37. This was COVID, this is avoid. 34% now. You know how much percentage change when I say in 2014 TVS were doing a gross margins of 29%. Now it is 34.8. So how much percent increase? How much percent increase? How much percent increase? 5 to 6. Guys, so when we talk about numbers, when we talk about percentage, sorry. When we talk about percentage, so we don't talk in terms of percentage again. When I say how much percentage increase, and when there are 2%, if we calculate in this way, we calculate. You are right, it is 5 to 6%. It is right. 34 minus 29. It increased by 5.2%. But we don't say 5.2% again because it makes a different answer. 29, 5.2% of 29 is something different. Not 10% of 29 is 2.9. You cannot say that there was a 5% increase. So when there are percentage, you always talk in basis point. That is called basis point. You calculate this way only, that 5.2% increase, but you don't say 5.2% increase. It is like 100 basis point is equal to 1%. 100 basis point is equal to 1%. So if it's 5.2, then how many basis point? It is 5.2. So how many basis point? Be 520 basis point. So this is how we, if anyone asks you what happened in margins, it has increased by 520 basis point. So, you know, in our government, when they change RBI, when they change the repo rate, you must have heard, it says 25 basis point. Now, how much is 25 basis point? If I write in this way, 25 basis point increase means how much percentage increase? Let us say it was 6%. Rates were 6%. It increased by 25 basis point. So you have to divide by now 25 divided by 100. You will get 25 divided by 100. You will get the percentage. It is like 0.25 percentage. Given the basis point, easy to find percentage, but given the percentage, you have to find it this way because it is very important to understand. When in finance, you don't talk about percentage with percentage again. And see, usually margins increase only by a small amount. It doesn't increase so much. Now, what is the reason? If I ask you guys, what might be the reason? According to you, what analysis we have done till now, it was 29. So there's a big difference. 520 basis point, it's a big difference. What might have happened in TVS? 29%. Satyam, commodity cost never declines. Have you ever seen your milk prices declining? It might decrease for 1-2 years, but not over the years. Means you are saying that your milk was costing you rupees 70 and now it is costing you 65 after 10 years. Right? Won't be possible ever. Which commodity price have declined? Tell me. Okay, it might be from year on year, it might be, but not from this to this. Which commodity prices? Steel prices, you think steel prices have declined from 2014? Year on year, it might be have an impact. But when I'm saying that it has permanently increased, it was 70 rupees. Sorry, it was 30 rupees. Now it is 34, 29.6 and now 34.8. So you have, your margins have expanded. It is called expansion. And commodity cost don't increase much. Commodities cost don't increase much. or decline, so decline much. It will never happen in the last 10 years that the commodity price have declined. So permanent decline is not possible. So yeah, I'm saying over the 10 years, now over the 10 years, you will never see it is declining. You will always see it is stable or somewhat. Now why these numbers are there? Because I had told, Kalyan had replied, right, Joel also, that they might be selling premium products. That is why their margins have expanded that much. It is in the same range. In the same range. It is because they have expanded their, they have come into premium products, and that's right. TVS is now selling much premium products. Before 2014, they were selling normal products. Now they are selling a premium. Normal. You see the TVS products in 2014, TVS Scooty Pep, which will all like 30,000-40,000 products. TVS Victor, TVS Star City. Now which price? Now which products they sell? No, 200, 300cc bikes. This has changed over the period of time. That is right, that TVS have started selling premium products. This is why numbers are important. If you get only for 5 years, you will never understand it. You will say the same, sir, commodity cost might have increased. Yeah, probably might happen. But when you look at 2014 and 2023, this much increase in margins, it is like because of the selling of premium products. Okay. Okay. Now this basis point, got it? This is called basis point. Always talk in basis point whenever you interact with anyone. If you never talk about percentage again, that's a 5% increase in margins. It's not. It's always basis point. And let's talk about employee cost as well. Okay, employee cost, again, it is year on year. What is the year on year increase in employee prices? Year on year. So now when I see guys, tell me, what is the annual increment in India? What annual increment you get or increment, huh? No, I'm not saying promotion. If there is no promotion, 6 to 10%, 8 to 10%, right? 8 to 10%. But tell me, for a company, how is it possible that there is an increment of 38%? How is this possible? Means everyone getting almost 40% salary hike. No, this is employees. This is like 40%. Okay, number of employees increase, right? That is the only thing, because this is uncommon. This is uncommon that your salary is increased that much. See, 20% is still fine. Everyone will not get a 40% bonus. Everyone will not get a 40% bonus. Let's talk about sales. When you say about bonus, okay, sales have increased by 20% and bonus also 20%. This will never happen. 40%, sorry, 40%. Sales increased by 30%, bonus 40%. See, this is uncommon. This is quite uncommon that salary increase. This is also, this 2 years, Satyam is right that it might be possible that TVS have hired more employees. Now, hire more employees. And why do they hire? Because of business expansion. Or might be possible that they have taken some company, subsidiary. They have invested in or maybe started a new unit. Might be possible that there is some expansion which the company has. And that is the reason that employee expense have increased this much. Now go and see in 2018 and 19 annual report, why did the salary increase so much? Might be possible because of, you'll find some acquisitions. Company has done some acquisitions. quite likely. So this is how you analyze the annual report or maybe the numbers. No, annual report, I'll say the numbers. Okay. Again, other expenses. Oh, this was COVID year, no? No increment. You cannot always say closed. It never closed. Huh? If they have sold off, we will get a news, but like no increment. See, usually this is normal. 8 to 10%. This was COVID, so obviously that time no one got increment. So 8 to 10% is usually common. Yeah, this might be possible that they had required BS6 technology. That might also be possible. So yeah, means something has happened over here. You will obviously notice that something has happened. BS6, it came in 1920, right? So this is, I think, probably Satyam, I think this might be an acquisition over here. You don't see that hike, that much increase. 40% is way too much for a regular business. So now other expenses is always as a percentage of sales, because this is usually the amount that you spend on marketing, sales, product, branding and all. Usually, I'm not saying always, usually. It also other expenses also includes director remuneration, electricity, then your traveling expense. So basically those are fixed. Those increase with inflation. But the major expense over here is always the advertising one. Now we'll talk it as a percentage of sales. Again, how much amount you spend as a percentage of sales. Copy and I paste. Percentage of sales. Here it is now, you see it is in the, okay. It is okay. There is no major expansion. Here see they have spent much, okay, but this is the sales were quite, the base were quite small. So it is okay. They have spending. So we assume that, TVS is spending around, 13 to 14% on marketing and sales, or maybe other expenses usually. See the average around 13 to 14. So we can take 13.5% is what we can assume for the future years. I take the east. Okay, this was higher over here, but if you see in the last 4-5 years, it has been stabilized. So usually you see this higher at the time of brand launching. When you launch new products, that time you will see this expenses increasing. So we will assume that, okay, 13 to 14%. So year C4. So year though it was BS COVID. Before pre-COVID, it was what, 15%. 15% was TVS was spending on marketing. See now since their sales have increased, the base have increased. You see the growth for TVS 31, 23. This is not normal. This is very abnormal growth. You never see this kind of growth in any normal company. With the size of TVS, 30% growth. Again, this was the COVID. Again, 31% growth in 23. This company is growing at 30%. That's a huge, that's a very good sign for the company. And if you see this stock, the stock price of TVS have increased a lot. With PAT margin, I will also take about year on year. I will also take the growth. What is the profiting? Let us say if the growth sales are increasing, is the profit. See, profit is also increasing at a high pace. Twenty 79% increase in profits. Quite obviously, you see costs have declined. This cost have declined. Okay, this have increased. Again, there is 36% growth. See, anyone can read the annual report. What has happened in TVS? 36% growth. Now what has happened? Something have happened. Again, they must have collaborated. I think they have collaborated with someone now. If I'm not wrong. This year they have collaborated with BMW to sell their BMW bikes. No, TVS makes BMW in India now. And they are responsible. How Harley is Hero is selling Harley. Same way TVS have a partnership with BMW, and Bajaj have a partnership with Triumph. So TVS is responsible for selling BMWs in India. They have done some partnership over here. Okay. Fine. This is how you get your format ready. Now you have already you got many things to know. You got many things that what have changed, what things have how the company has transpired, which year it had problems or which year it was exceptional. You get from this data. Only operations is important. So interest you will see say increase. Reason interest increasing. It is like almost 6 500 into 6 is 30. Reason expansion, and maybe because I'm taking debt, expanding, taking debt. They might have taken a lot of debt. We had discussed in the modeling that higher debt, higher returns, the dual-edged sword. More the expansion, more the debt, higher the valuation. I have talked debt to equity. Debt to equity is higher, the mal valuation will increase. That is why you see from 2008, what has happened to TVS. Let us see. I don't know what has happened, but probably they have taken debt that was for expansion. Let's see the chart from 2018. So 2018 they have taken, so they must have started from 2017 only. Okay. It has declined. So what might be the reason? They have expansion. So why it is declining? See, it has increased before taking debt, and then the company had a downfall. So now this downfall was there for every auto company. It is not only TVS. There was an issue with the company, with the sector. There was a lot of changes which were happening in the sector. BS4, BS6, GST came in, many things changed. But see, before 18, though, we have talked about 18, means they have taken debt over here in 18. That is the end of 2018, that is March 18. But the stock had started moving up, but then it had a rough phase. Demonetization, even demonetization. Yeah. So many things happen over there. But that debt, the company which has taken, might possible that, in this period, after this, that debt might have, means that expansion might have come into play. And this debt might be because, that the BS6 transition only, they might have BS4, BS6, they have to change their entire factories for that. They have to add something into the engine part, BS6 norms. Because of that, they must have taken debt over here. And now, see, interest cost is increasing. Now it is also a concerning sign that what are they doing? Are they taking more debt? But yeah, when the economy recovered, it was the one to move at a higher pace. You would not see this rally in TVS in Hero and Bajaj. But TVS have done this. A downfall of almost 5 years, 2018, 2020, sorry. No returns from 18 to 20, zero returns. But from 21, had increased. Now, reason because the entire auto sector is doing good. And you will see the data about auto companies, they are posting fantastic results. and with premium products. Only premium product sales have increased. Recently, there was a news about Mercedes, BMW, Audi have done 30,000 units are sold in the calendar year. And it is the first time they expect that in the year, till the year end, it might cross 50,000 units in India. And this is a very good sign from the economy perspective that people are buying luxury cars, means economy is growing. Economy is growing. See, 50,000 units of cars. Previous best was 15,000. Usually, all are luxury car sales. It was 15 to 20,000 few years back. Now it has been 50,000, more than double. So now, though, I feel, forget about Maruti. You should buy stocks of this company, luxury cars. I think so. People are buying, and because those are premium products. So they will be having higher gross margins or higher margins, I would have said. Okay. Dam capital. Okay, fine. So you also have to analyze, Joel, that you should not even blindly trust them. It might also happen that it might go the other way around. Because TVS is have a risk. They have a big risk of this interest. It might be possible if the entire auto sector only stops performing. What if they get an tough competition? They have done good. I'm not saying that they have not done good, but I used to always have this concern with TVS. I never purchased this stock, though it has given returns, but I always, because you see the margins over year of TVS, 3%, 4%, 5%. Not 4 was max. I always fear this. But somehow they are able to manage it, that it never goes into loss. Even in COVID, they have done profit. I think they manipulate the earnings, or I don't know, that their margins are always stable. Whatever happens in the economy, their margin is always 4, 5. See, you see 3.8, 4.1, 4.1, 3.6. Same. It never increases or decreases. I don't know how. But here, a bit margins now. Here, I would have said that okay, they have done a fantastic job. See, they were doing 4 and 5% on EBIT levels. Now they have reached 10. This is the reason why the stock is up. And this not analysts, but investors have already known that the company is doing really good while doing channel checks. And you can see a lot of TVS bikes on the iQube is doing very well. An iQube electric bike of TVS. So TVS have 3 scooters, which is competing Activa XS. They have Jupiter, they have Ntorq, and this iQube. And they are doing 10,000 units every month. That's a good sign for TVS. Okay. Guys, we'll take a break. I'll take a break for 10 minutes. We'll be back by 12:20. Okay. Then we'll proceed further. Okay. By 12:20. Nine. Back in 10 minutes. Hi guys. Hope everyone's back. Yeah. So guys, since we have got this data, we have, see, from raw data, I have created something to look at. 1 second, guys, it's a problem with my Excel. Okay. Okay. From raw data, I have created something to look at. This is how you need to make for all other companies as well. Now, here you will actually find that what things are changing in the companies and what have and what lead to the change. Now here, when we look at annual report reading. So in annual report, what you have to read majorly is about the company. If it said about the company, or majorly you get all the data about the company industry in MD and A. That is management discussion and analysis. Right? Management. This is the only thing that you have to read: management discussion and analysis. This is the only thing that you should read in annual report. Because even if I say read the entire annual report, you are not going to read it. This is usually 5 to 7 pages, maybe 10 pages for companies. Which companies who give data, more data, they write the pages are more. But that is the major thing that we as an analyst, first thing we look in the annual report. Here, we'll find it in the. So now, see, now it is here. there is no index about that, but you can always search it about Control F and do management. You might get management. Just Google it. Sorry, just management discussion, company profile. So just go down management. And director's report now. Now here, see, you'll see they are talking about mobility industry performance, electric vehicles. Now this is the management discussion of the company. I said no, either the company profile about the company or the management. So here there is no management discussion. They are writing everything about the company's performance. So you can go and find. So this you have to read. See, BMW Association. This is okay. Two-wheeler, you find it over here. Management discussion analysis report. This is where you have to read this entire. You will get about the companies over here. See, you also get about the top selling products of Hero. TVS Apache, Ntorq. They have given all the products. TVS Run, TVS Raider, Jupiter Classic. So majorly now, all the companies don't give such kind of things. TVS have given. So you have to read it. Bajaj, Hero might not give. But this is where you get a lot of information. And this is not only for 1 year, you have to read it for at least last 5 years and make a note out of it that what has happened from last 5 years. And if anything major happened, like this, if you see something different, here, this annual report, you have to read by Hooker Group. What has happened over here? Why did it increase so much? You will get this answer because it is an abnormal increase. You'll get an answer. 2018-19, go and read. Annual report, MD&A, go and read that section. You will get the information over there. Why it has increased. Now, I used to read whenever research used to start, it's like it used to start like this. Which annual report to read? Now, obviously, you cannot read the last 10 years annual report. You have to, be smart enough on which annual reports to choose from. Obviously, recent you have to read, 23 you have to read, And now over here, what has happened in 20 now, sales year also, year that was COVID, 20, 31% growth. See, something has happened over here this year. I don't know what has happened, but something has happened in 2018, 19. Why there was so high growth? Even the numbers are so high. Was it an acquisition? Was it actually the TVS has performed well? Because when you look at the stock price to have declined in this year. Stock price to have declined. The sales have increased so much. Reason might be possible that they have done some acquisition, and that acquisition is helping them grow now because now the industry have revived. When you do research, you have to tell, sir. I mean, if someone asks you when you go for interview, they say you have done a research on TVS. You cannot just say only TVS. You have to talk about entire auto sector. We only go in the interview and say, we have done research on TVS. It will grow like that. I have made a model, etc., etc. First of all, why TVS? The question will come, why TVS? So in the last batch student, when he gave an interview and we were talking about Metro brands, the first question asked to him was this: why did you select Metro brands? Why not Bata? Yeah, I always say, why TVS? Why not Bajaj Auto? That is a stable company over there. Why did you choose TVS? You have to give reasons. Okay, the growth prospects of TVS are different from Bajaj or maybe Hero or maybe Eicher. For that, you have to have models of all the companies. Classic reason, margins have expanded. Reasons, if I would have fresher, and if someone would asked me that, why did you choose TVS? Sir, margins has expanded. Bajaj, a premium product. Now, what is the margins for Bajaj? What is the margins for Hero? The margins are higher. I know that Hero and Bajaj margins are higher. Now, TVS is catching up. See, now, if in industry, Bajaj is the leader. So, Bajaj has a margin of, assume, 15%. 15 cannot become 20. It is not difficult. It is not easy to, margins to expand so much. But 10 can become 15 because TVS and Bajaj sells the same kind of bikes. So this is how you, talk about research. When you say so Bajaj is okay, it's a market leader, it's a good company. I'm not saying it's a bad company, but the growth lies in TVS because TVS has a room for margin expansion, whereas Bajaj don't have room. Bajaj is already the market leader. They're already selling premium products. Now, TVS is catching up with Bajaj. So it might be possible that they might be able to expand their margin, which is 10%, might be possible that they might reach to 12, at least till Bajaj. Now that is a good sign. And how it will reach, that you have to give reasons. Premium products, then maybe Aqua partnership with BMW, selling high-end products. So majorly all your research hours around sales. And then debt. Why have they taken the debt? See, again over here, the debt has increased. So I will suggest read this annual report 2018. What? MDA session. That's it. What happened in 2018, 19, 18 rather. See, debt, everything you see, numbers are uneven. Are uneven numbers. This suddenly increase. Employee cost suddenly increase. Margins also suddenly expanded from here. From 7, it became 9.4. Interest increase. Something dramatical or good or bad, something has happened over here. Margins increase, so obviously we say it's a good sign. And gross margins, okay, so it has not declined much, but your EBITDA margins have increased much. It is just almost 2% increase. Here also 2% increase. Commodity cost decline, or maybe premium products. Usually you don't see this kind of fluctuation in commodity prices. Usually, I'm not saying, but usually you don't see this. But it might be possible that company has launched some products over here that has led to increase in margins. Now TVS also sell auto rickshaws. Three-wheelers. So what changed over here? Which product performed? And then you start doing your research. You go like this in the interview, definitely will get selected. But the problem is that we don't have time to do research. That is a problem. Write this in a report. Write a thesis whenever you send CVs. Now you guys only send, when I say send CVs, you only send CVs to the recruiter. What he will do? Are you from IIM? Are you a CA or a ranker? Do you have a relevant experience? No. Why would I even open your CV? I have, few students have sent the CVs. They said, sir, it is irrelevant. So now, you can at least write something in your CV and then send. When I tell you, send your CVs to me. So write about, I have sent already one CV of my previous student, how he has written about RK advisory and training. You can write the RK training rather. You can write what you have done. That should be the main focus. Other things you have done, you have worked in accounting field, you have worked in sales, or that is irrelevant. Just write one line on it and just forget it. No one will read it. If you want to write pointers on this, that what have you done in RK advisory, you can write in the, in your qualification, not qualification, in your project, what project you have done. You have made a model on TVS, you have made a DCF, you have worked on DCF, you have done ratio analysis and all that you write. Rest all things are irrelevant in your CVs if you go for finance. Now, your past experience is totally irrelevant. And you make your CVs full of that. One line is fine. What you used to do over there, which company used to work, and okay, assistant manager or maybe an account executive. That's it. The entire first page of your CV should be like this. Then only your CV will get selected. Okay, for equity research role, I'm saying, or finance role. Or else, if you write other, even if you have experience, I'm not saying you should not write it, but just one point is fine. My CV, though, I was a sales guy. I have, I didn't wrote only that I was doing sales. 3 years I was doing sales. When I went for equity research interview, I only told that I have done internship. So he's saying, what did you do in the last 3 years? When my graduation was, let's say 2010. So 2013, 14, I applied. So what did you do in the 3 years? I said, nothing. I was studying. I said, I studied for CFA. I failed, etc., etc. I was studying. I didn't even mention that I was doing sales. And for only few, I mentioned sales because, because of my last salary. Because I told him, okay, this sales job I was doing only in one line, which company I was working and what was my position over there. I wrote, okay, working in angel broking, relationship manager. That's it. And what I was doing over there, I didn't even mention that. And obviously, HR even didn't ask me what, he only asked that, what did you do in this 3 years? I said, I was learning. As it is, I was a fresher. So it didn't matter. This is what you should write in your CVs. Or else your CVs will get rejected. And now make this 3-4 companies at least at a stretch. Make this data, make this little bit, what do you say? A format, make it a good format, make it in millions because millions is what is preferred. Okay, so all numbers should be in millions. Now, this is your raw data. Don't do anything with this data because here you have to punch data when new numbers come. Just play with your now this also. Now this is okay. Now here also you can directly do it. Millions. Now just 10 copy. Now because this is the main sheet. Obviously, select this also you can select. Don't select the bold numbers because those are calculated numbers. Select, yeah, selecting it. Select page special, and then we have to multiply. First, you have to copy, copy and then page special. And make sure it is tallying, means everything means numbers are perfect. This and even for your cash flows also you can do it because here we don't change anything. Only P&L we have forecasted. Rest all is fine. Here also make sure you do it in all in millions. Wait. It's 406. So make sure it should not change. Pay special, multiply. Fine. Okay. Always make sure there are no decimals. Now you remember what we did. The first thing we did was other equity. So models, your models should always start with forecasting should start with sales. You have to start forecasting about sales. So 2024, what you will do is 2024, I will write 2024 forecasting F. This forecasted numbers. These are all actual numbers. These are actual numbers. These are all forecasting numbers. Annual and then forecasting. So how did I do this? Cells, custom, go to custom, more number format, custom. See over here, general. Na? See, this is general. So you see the sample over here is 2114. But now when so I have to add actuals in front of it. So what I can do is I can add 111. See, but the problem is the year now. If I want to do it for next year, let's say now that I have linked, but let us say I have to do for 2024, sorry, 2014. See, now it comes directly A. Now I can is equal to and plus 1. I can do it. But what if it was a normal number? What if the format was like this? Now I cannot put A over here. If I put A, now see, I cannot calculate it. So every time I have to put A every time, actuals. So what I do, I change the format only of the cell. I go over here. The first I write 2014, write 2014. Then more number formats, custom. And here I'll go up. And this 0, I will put this 0. See, the sample shows 2004. So I'll put my cursor over here, put a space, inverted commas. First inverted commas, I write A, then inverted, close inverted commas. In between A. So you can write anything. Huh? You can write anything. A, I think, A. Okay, what if ACT? I have to write ACT. ACT, actuals. And also write this full actual. So it comes. I can. And then what you can do is equal to plus. So it becomes easy. Make sure you copy the format. Format painting. Actuals. You don't write actuals, you write A. Go over here. Again, custom. No formats. Here I have actuals. I will just do a change. A. Done. So it looks better. Forecasting also same 2024 because I see I have to focus 24, 25, 26, 27. So every time I will not write I will not keep on writing A. So here, so now you have to write focus. So it is F. So custom format, make sure it is A. So put your cursor over here and it is F. F or E, whatever focusing. I write focusing. So here it comes easy 24 plus 1 will be 25, 26, 27. Okay. Till 30, whatever you want. Done. Okay. The first thing you will start forecasting with sales. And then we'll go to other equity. So the other equity also, you remember our how we made them schedules, opening balance, add less, and closing. This is still there for every company, right? Add less, closing. Every schedule. What do we add? What do we add? Profit for the year. Profit for the year. And less is, what we less is the dividends. Now over here, don't try to tally this. Don't try to tally this for the historical years. Don't try to tally this for the historical years. Where will I get the closing balance? 2014 closing balance, where will I get? I say balance sheet 2014 and it was other equity. Other equity. So we'll get this closing balance was other equity. Just link this. Don't try to tally it. Writing a note over here. Don't try to tally. Don't try to add. Don't try to add numbers for historicals. Yeah, keeping a note over here. Don't try to add a number for historical. So obviously this become opening. So this is fine. It's okay. 23. Okay, we have done 23 now. 22, 23. That's also 23. Okay, now profit for the year. Where do we get profit for the year? In the P&L. So we can take the normal formatted. Now we'll do it formatted one. Pat is fine. Just don't add it. Dividends. Where will you get dividends now? Any idea? Where do we get dividends? Where will I get the dividend number? Yeah, cash flow from financing activity. We'll go over here and cash flow statement. You will find dividends paid. This was the dividends paid. Here, what we got is we got how much dividends the companies are paying. And we can find our dividend payout ratio as well. Dividend payout ratio means how much percentage dividend you pay. How much percent dividend you pay of the profits. So we know that you pay 695 of the profit of 187. So we know that 37% historically is fine. Okay, we'll got this answer. Again, I'm saying don't try to tally this. Keep it as it is. Just link it. Don't add it and say, sir, it is not tallying. It will not tally because there are other items also which makes a lot of changes. So for that, you have to go to annual report and find. As of now, we are not going that deep because those numbers are not required. We are only interested in profit and dividends. So that is the cash inflow and outflow. Other, there are a lot of adjustments which is done in this. Okay, in future you can do it. Okay, for 24, when you do it, that time you have to start tallying. 24, now it is what? Opening. Will forecast PAT will come from P&L, dividends will forecast, and then be closing. So it will be opening plus add minus dividends. Okay. I'll do it one for you, free space. Let me do it quickly. Now I'm just taking a random numbers now for forecasting. Don't ask her where it is coming from. Just taking random. I'm saying, okay, 10, okay, 20% sales. Okay, 20% sale. Yeah. Just taking random now. Don't ask where it has come. It's random. We will talk about this later on. So 20% growth. So last year into 1 plus. This we have already done it. So I'm going a little fast. These are my assumption. 20 is my assumption. So I will copy and just take it forward. Whatever, wherever I want. Direct expenses. Now I say 65. So it was around 60. Sorry, 66%. Assuming I'll keep this 66% as constant. Maybe I will just link this. So once I change, everything will change. Constant. Usually it is the historical. Since the historical, I will take from 21, 22, 23, around 66%. Okay, 66%. Then a gross margin. See, gross margin then will come automatically since I have linked it. Employee cost. Usually, you said the cost increment in India is around 10%. 10 to I will take around 10%. That is more practical way of taking the assumption. And always percentage should be 1 decimal. Should always be 1 decimal. These are our assumptions. So it is coming in red. Sorry, it is growth. 10% increment in growth. Copy and I paste it. Other expenses, percentage of sales, I will say around 14% is the company spends. 14% is around the company spends. It should be in red. Okay. Keeping it linked. So once I change this number, everything else will change. Okay. Beta margins. 5, we don't want 29. 5 years is fine. So depreciation, I'm keeping it same because depreciation will come from our asset schedule. We have done it. As of now, I'm keeping it same. Interest is also I'm keeping it same because I don't know. Okay. Other income, probably keep it same. No need of forecasting it. As it is of no use. No need of forecasting it. Keep it same. Usually we take as a percentage of sales, but that is also not a right sign of doing it. Just keep it same because it is not required. And then keep this 0 because this better not to forecast. You cannot forecast what is the exceptional item and all those are one-time items which are not continuous. This also, we don't know what is happening over here because we don't have any data about the subsidiaries. So better keep it same. This is fine. As it is, again, it is not an operating activity. So it is will not impact our valuations. Those numbers, whether you take same or you change, will not impact. You see now here, the effective rate in India should be around 30%. So let us say what is it? For TVS is around 28%. So the average is around 28%. And it has fluctuating a lot. So you can take an average 29, sorry. Recently it has crossed 32%. So better take a steady rate of 30%. That effective is because of deferred tax and all. So ideally in India it is 30%. So keep it 30% because we are not doing any other deferred tax calculations. So better keep it 30%. And then our PAT margins. So once our profit come. Now what do you do with this? Now you have got a profit for 24. Profit after tax. How will you find number of shares? I have to find EPS, earnings per share. Is if I give you balance sheet and PNL and I give you a face value. Face value, you will find it from here directly. The face value for TVS is no. Why notes of accounts every time? See, first of all, you have market capital, sorry, stock price and the market cap. Here also you can get number of shares. But what if you don't have this? I give you only the face value. I give you what is the face for 1? Face value is 1. Face value for TVS is 1. Now usually you don't get notes of account in repo or when the results are out. Annual report, the notes of account, so you will get it perfect number. But I tell you, okay, fine, approx. You don't have notes of accounts. Find it from annual report and find it from PNL and balance sheet. I give you the face value. Face value is 1. How will you find number of shares? No, go to a first class where, can I say this is the amount raised? 475 millions has been raised by TVS. 475 was raised and per share value was 1 rupee. So how many shares company must have issued? Face value is value as per books. The company. 475 crore millions were issued and face value was 1. So obviously, yeah, it is 475. What if it was 475 divided by 1? This is 475 million shares the company has. EPS will be profit. EPS is profit divided by number of shares. EPS is nothing but profit per share. Huh? Earnings is just the way you say. Face value, you can Google it, you will get it. Usually when the results are out, you get in the results. Google it, any company Google it, you'll find the face value from. Here though I found Indian companies, you can get it over here. Foreign companies, just Google it, you will get it. Or maybe in the annual report also they sometimes give it. Where in the annual report, as in the where you find this data, it's all raw data. That time they write over here somewhere. Not written, but usually they write. I'll Google it. Google, so you will get it. Annual report is the best source, but for Indian companies, though, you will get a very anywhere. Face value, see, which is this is service limited. Sorry. See here, you get usually in the profit and loss statement, you get it is always there. Face value of 1. Okay. For that, you don't require an annual report or notes. Notes, so you will get exact number. Here you can approximate get the number. So that is fine. Approximate numbers is totally fine. Now what do you do? Once you get the now let's find dividend per share. Dividend per share. Since the dividend per share paid was 695 and we had number of shares 475. So TVS is paying around 1.4 rupees. Talk about historicals. So it has increased. 1, then it started paying 4. Oops. Here also you see the profit have increased a lot. It was 1000. It is almost double. This also. Fine, this year also. What happened? From 2014, it became 2000. See, it is almost double. 1800 is 3600. Double. Also a sign of this annual report you need to read. Got it? Okay. This also. Now, as of now, you're assuming that last year they have paid 6, so this year also they will pay 6. Assumption, huh? I'm assuming that it will be 6. Now we will do this, we'll streamline these assumptions later on, but as of now, I'm just linking it. We profit after year, profit for the year will come from our formatted P&L, which was this, okay, 16,840. And then dividends, I can say 6 per share into number of shares. That is, oh yeah, okay, sorry. So this I have not forecasted. Assuming I will keep it same. Fine. Let me do it later on. Okay, I'm just linking it and keeping it. So once I change the numbers, it will change. I can copy and drag it. 23. Sorry. Make sure it is linked. We have done till 28. So let's say dividend. Let's say I'm giving you a number as of now. Okay. I'm keeping it same. Yes, yes, since it is negative over here, I have minus it. So if you do it negative, make sure you add it over here. Don't again minus it. If you are minus, it will become positive. So keep, if you're doing it, so we have learned this way, opening, addition, subtraction, but it is already in minus. So make sure you. So if you're doing it plus, so make sure you're minusing over here. If you're already keeping it minus, again add it only, don't minus it. This done. Now what do you do? What are the steps that you follow to tally your balance sheet now for the next year? You have to copy your balance sheet as it is for the last year. 23 balance sheet, make it same as 24. Same. Don't change anything. Copy and just paste it over here. Means it is same to same. See, it is telling. It is same to same. No difference. So this is the first step. Now what I have changed? We know that other equity has changed. What has changed? Your other equity has changed. Now this 54, sorry. Last year it was 54,000. This year it is 68,415. Now when I do this, you will get a difference over here. You will get this difference. And you should, first of all, you should think that what is this difference? Why I'm getting this difference over here, 13,840. So can I say 16,000 was the cash inflow from operations and 3,000 was outflow from financial activity? And that is how I get 13,840. Am I right? So what we'll do is, now we have to just link it in the cash flow statement. That's it. Nothing we have to do. And cash flow statement we have already made. So now don't copy cash flow statement as it is. Cash flow statement, every item will come from schedules only. Either schedules or P&L. You should not copy this over here. Cash flow statement, cash flow statement is never forecasted. Things are forecast, items are forecast, and from that forecasting, you make a cash flow statement. So we have forecasted what? We have forecasted PAT and we have forecasted dividend. We don't forecast cash flow statement. I have seen one student coming and telling me, sir, I don't know how to forecast cash flow statement. Cash flow statements are not to be forecasted.
Excuse me, Rishabh.
Yeah.
So just wanted to know, like, for balance sheet, why did you just copy pasted 23 figures to 24?
Because whenever things change, okay, whenever, now this is first step, we will start changing every item afterwards, but I do it
Okay.
step by step so that you don't go wrong in it.
Got it.
That is why I do it. If you want to see what happens, many a times every item are not to be forecasted. You cannot forecast also. You cannot forecast what is investment will be, what will be
Agree.
loans receivable. So we keep it same. But why I copied this? Because no, see, I get a difference. So here what happens that I never go wrong while tallying, while linking it, because I know this is the perfect difference and I'm getting that difference over here. You can see addition, subtraction. So what I will do, I will go to the cash flow statement. I will add it in the CFO and subtract it from CFF. I'll get this difference. I'll show you. Go to cash flow statement. So not see what, only two things I've added as of now. PAT. So now it is showing before tax. You can start with after tax. No harm in it. But make sure don't subtract taxes again over here then. If you are starting with profit before tax, make sure you subtract your taxes from over here, or else keep it blank. No harm. Start it from profit after tax. Though it is written profit before tax, it doesn't make sense. Our answer will be same. But don't add, means what you are starting with before tax, because there is some adjustments that they do. We don't understand what is that adjustment. See here, the taxes paid is different, and in the P&L, if you see, the tax paid is different. 6226, here it is some different amount. 6067. So there's some adjustment that they make, because in that there was also deferred tax and liabilities. In our statement, when we forecast, we assume all the tax has been paid. Okay, we assume that all the tax has been paid. So what we do is profit before tax. We'll start from after tax. Now link it from all the schedules. We add this. Sorry, 24, 16, 840. See what happens since it is, Pranav has copy pasted this. See, everything changed. You see, investing didn't change, financing didn't change. Okay, so our net cash increase. Our net cash increase. So we want this end of the year cash. We want this. So this is not required. Net. This is okay over here. Keep it. Total ABC is this CFF plus CFI plus CFO will get you the net increase or decrease. I will rather do this. Oh yeah. Okay. Net increase or decrease in the cash, which is A plus B plus C. So beginning cash, okay, this was the ending cash. So can I say ending will become beginning of next year? This was the ending balance. Achha, now you have to keep one thing while doing. See, this ending cash should be same as the balance sheet cash. This ending cash should be same as the balance sheet cash. But sometimes there is a problem that they are not same. Ideally, it should be same. Let us see. Car cash. Oh yeah, cash and cash balance. This 123. See, now though it is true means it is same. But many a times this cash is different. This cash is different because they also make some adjustments to this cash flow statement. They talk about, see now here it is not telling. Here it is not telling. Well, last year, if you have done, let's say if you were in 2020, it would have been difficult for you to. So now it is telling, so it is fine, but many a times it do not tally. So here now I will always suggest take this ending year balance from the balance sheet itself. From the balance sheet itself. Go to balance sheet and take this cash and cash equivalent 23. Yeah, just link it. And keeping a note over here, link from balance sheet. D60, 64, D62. That's fine. We see historical, though we don't have to do anything. That is fine. This though, I just want the data of this, how much dividends are paid, how much dividends are used. So
the cash at the end of the previous year and cash at the beginning of the next year should be equal, right?
so it is not. So what happens many a time, they do some adjustments. We don't understand what adjustments they do. They also add cash over here. They also subtract. So if you go and look at the annual report, you have to make two different schedules for that. That is why, for us, when we are focusing, we don't have that much of data. So what we'll do is we will, while doing it, we will make sure that our closing cash is coming from balance sheet 23 and opening cash is the link of this.
So for only 1 year, we need to link it from balance sheet now.
For 1 year only, no? Last year
Okay,
only.
then it's fine. Then it's
This
fine.
year we don't have to do it because as it is not any use for us in forecasting. They do a lot of adjustments, companies do a lot of adjustments. We don't understand. Usually they add, see, cash cannot be negative. You see, cash cannot be negative. So here it is minus 166. But if you go and look at 2016 number, it might be, no, see, it is positive. Cash cannot be negative. So what they do, they take overdraft. That is not shown over here. They directly do adjustment in some other schedules. So it is totally fine. Okay. So your closing cash, so ideally your closing cash should be, it should be this total increase plus the beginning. Ideally, it should be this. Should tally. But yeah, in the annual report, it might be different. Okay. So this are for us, 23 numbers are important. Rest all are not important because we are not linking anything from this year's. This year's is just to analyze. This year's are just to analyze. So this 23 is the important year for us. All the numbers should come from the balance sheet, or else there might be your balance sheet will not tally. Okay, this, and can I say now my cash balance for the next year is 18,000 was there from last year and 16,000 I earned from operations. 35,000, 16,000 I earned, but I also paid dividends. So cash outflow is equal to minus sign. Is equal to minus sign. I go to other equity and then this. Now, see, you see the difference? 18, 13, 840 means I have done everything right. Cash at the end of the year is 32,000. Now, this cash is obviously linked with our balance sheet. We'll go and see in the balance sheet. This 1852 has changed to 32,325,352, and our balance sheet tallies. Our balance sheet tallies. Here also I will just change it. It was what? 6 into number of shares from the formatted. Okay, oh yeah. And change. Okay, this when I punch the numbers on the balance sheet, the numbers will come automatically over here. Since that is. So we will also create a schedule for other equity. Sorry, the equity one. But as of now, everything is linked. And now, what I can do is, I can just drag this. Copy. Now this you have to do after doing all the adjustment. I'm just showing you one. This you have done over here. And then balance sheet also you can copy and then link it. Now this you have to do at the end. Just showing you how does it work. As of now, if you tally one balance sheet, your others will also tally. You see, it is tallying. And numbers are different. Numbers are different. It's not the same numbers. You see, the numbers are different. So this you have to do it at the last. Once you have all the assumptions are done, all the schedules are done. Cash flows also you have to do it at the last. 24. This you have to tally. Now, next class, what we will do is we will make the asset schedule. And that time I will tell you how things will change. Now, asset, what will happen? Capex will change, depreciation will change, profit will change, financing activity, investing activity will change, operating activity will change, and my item on this, my net asset will change. And then we will tally. Okay. Now, those who want to start, I will send you the videos of the previous class, where I have linked all this. There also the other equity schedule, sorry, the asset schedule, we have to find the gross assets which are not shown in the balance sheet. So gross asset, again, we have to take it from the annual report. Again, we have to take the gross assets from annual report. The PP schedule to be made from the annual report. I will share you the videos. You guys can make the videos and make the punch the numbers and keep it in this file. I'll send you the videos of the last class. See, last class videos now, the reason I put it on YouTube is you can watch it at 1.5 speed. So though it is a 1-2 hour video, you can complete it in 1 hour. So I don't talk fast. If you get confused, you can obviously slow the video. But 1 point, if you understand everything, you can just watch the videos and start preparing the model. So like this, I expect, TVS, Bajaj, Hero, and Eicher. But after that, we will do some ratio analysis with this full numbers with balance sheet and the P&L. That time I will tell you that why is this company and what has happened in this company and how do you analyze that. From that perspective, ratios are always to be compared. You cannot say whether this 10% is good or bad. You don't know. EBIT margin of 10%. Is it good? Is it higher? Is it on the lower? Until you compare it with other companies, this has no relevance. Okay. Till we meet next week. Till then, I will send you the videos of the last class where after what you do after linking this other equity and there's the PP schedule. So I will send you the video of PP schedule. That also you have to punch numbers from annual report. Same way how you have done Pranav. How Pranav have done, same way you have to do for PP schedule. Okay. I'll also do it. I will do for 1 year. Rest also, if you have the number, it will be very easy for you to analyze. If you don't have, then obviously it will have a problem.
Excuse me, Rishabh.
Yeah.
So, just wanted to understand your take. So, recently, Maruti Suzuki has announced 1.25 lakh crore capex, right, for doubling their capacity and also for R&D. So,
Right.
what's your take on this? Like, they have said that they will not be raising debt At the same time, they have only 45,000 crores of cash, out of which 12,500 crores they will be like paying to their subsidiary, which they have recently owned, right?
Okay.
So from there, where like they are saying they will just get those cash flow from the expansion, like expansionary cash which they will generate. So
Hmm.
what's your take on this? Like how to like see this development?
How to see the format or what the
Development, like how you see this development happening.
Okay. So see, I have to very bullish on Maruti. The way, the point we started the classes, I've been talking about Maruti a lot because see now when a company does a capex, so ideally what will happen? It will expand, and they said that they will expand the capacity to double. See, currently Maruti is selling 1,50,000 vehicle, that is the highest in India, and now they are saying they will double. Now, obviously, this capex is not for the ICE engine; it is for the electric engines, basically, because that is the
No,
only
no.
reason they can.
This is it's for both. It's for both.
It's for both, but majority will go for the EVs part. Majority EVs. So now they are coming. They are coming up with so many models. You see, for that they require capacity. They have made a one new plant for that. See, Maruti had a capacity. They were running at 80%, 90% capacity. Now with this expansion, now they are coming up with new products, newer products. That is, Invicto, Fronx, which are bigger. You cannot make the same on the Alto or maybe the Wagoner. What do you say? On the same factory, you have to have a different factory for that. So for that, they are doing this expansion, and I am the very bullish on Maruti. I keep on accumulating whenever the stock falls or whenever I get an extra cash, I buy Maruti.
So, like, don't you think we should prepare like financials and models for Maruti too? Because this is the right time to do it. Because just the company, like management, has announced the capex, and things are gonna just transform now. It will become double. So rather than preparing models on four of the two-wheeler company, would not be it better to include
So
them?
the problem is that, see, Maruti, it's fine, but there's only one company which you can compare. See, when okay, he says, okay, you are saying Maruti is doing capex and all, but what about the competition? You don't have any data about the competition. You don't have data about Honda. You don't have data about Honda cars. You don't have data about Volkswagen, Skoda. See, they are also competitors. No? You cannot ignore those.
Agree.
So you don't know what is the margins of Volkswagen. You don't know Kia. You don't know what are their margins. You don't have their numbers, basically. So when it comes for comparison, why Maruti is good? You don't have that answer. You can have, okay, you are doing, you can have, I'm talking to others. You want, you can do it. As you are doing research, you are there in the field, you can do that. But make sure you should have the numbers of the competitors as well. Here, why I say two-wheeler companies, because see, you can differentiate between TVS and Hero Motor with the numbers. Here, to we know, okay, qualitative, we know Maruti is doing good, but we don't have quantitative data for that. How will you, keep it in front of a fund manager? What is doing?
So here, just wanted to understand, like the analyst who must be covering Indian automobile sector, say OEMs. So how they dealt with this situation,
So they have the data, no? They have the CIM data. If not the margins, they have all the data that how much products the company is doing, what was the previous growth, what is the current numbers, what are the expected numbers. They also look at they go and find Kia's annual report from the Kia main subsidiary, that is the Korean one, and then they find if they have India sales or something numbers on that. There's a lot of research.
See, for the volume numbers, so we get it from CM also, and it's online available too for each model.
Right.
So that by looking just that, we can't make a perception about the margins and all.
Margins and all, we cannot make the perceptions. So they go and find from the annual report of the parent company, if they get. Or else, see, if you have the industry data, that is fair enough for you to do. Because this all, see, others are freshers. You are the only one with experience. So no one will talk about margins for you. But other guys, they will talk why Maruti? What about Tata Motors? What about M&M? You don't have those data.
Right.
Tata Motors, the PV data you don't have. You can get it, but it is very complicated way of getting the PV data for Tata Motors.
Private vehicle data to we get.
No.
Commercial vehicle
data as in how much margins does Tata Motors
no.
make? those all things.
I was reading one of the research report. They have like given a separate EBITDA margins for their commercial vehicle segment. I don't know from where they got those numbers.
That's what I don't know where they get it from. They usually get it from the management, or maybe some information from directly from the management. You don't get it somewhere written. It's very difficult to get that data.
Actually.
Even passenger vehicle, they say it is a loss-making company. I don't know how they analyze, but in the EBITDA, in the report, they mention that it is loss-making, but you don't know how much loss.
Got it.
That is a problem.
Understood. Then it's perfectly fine.
Okay, guys. So see you next weekend. Till then, take care and try doing the work. So see, interviews are lined up. Means there is a lot of opening coming up. I am also getting calls that do you want to join again and all. So now there is opening in the financial field. So make sure you make your models, and as I discussed, make your CV better. All the things that you have learned over here, write it there. And I have given a format. I have given the CV of my previous student. His CV is getting, his CV is getting selected by many firms, many HRs. So you also make it the similar way. Bye-bye. Thank you. Okay, we'll share the CV again. Okay. Sure.